Hi guys! So the purpose of this video today is just to show you or go over what StashAway is, what it has done for me, and just to run through a little bit about StashAway and how I've been investing in it and how you can invest in it too, and to provide you for whatever financial goals that you have for the coming years in the coming years. So StashAway is basically a robo-advisor. They would claim themselves to be a robo-advisor, and a robo-advisor for me is basically a trading platform that invests in your investments in a passive way. So it's a little bit different from mutual funds or unit trusts, where unit trusts and mutual funds, they typically have a active manager which would actively sell and buy stocks or trusts or funds for you, and to hope to outperform the stock market so that you can get the best returns. But StashAway, what it does is that it invests in exchange traded fund, which in short is ETF. And what ETF does is basically it tries to mimic a certain index, right? A certain stock market portfolio. So say for example, if I want to track the top 500 companies in the US by market caps or by weighted, I would track the S&P 500, right? So I would buy a S&P 500 ETF, and then that would basically track the stock market or the S&P 500 in the US. So what are the two differences of a mutual fund and a ETF, right? Or a robo-advisor, right? For me, the reason why I chose a robo-advisor is first and foremost, it's cheaper. It's way cheaper. The cost of it, the cost that they charge, their charges, their fees, and so on. StashAway compared to mutual funds are way simpler. And also, there multiple research that has been done that in the long run, ETFs or passive investing would always outperform mutual funds. I know there are certain exceptions. There are some mutual funds, some unit trusts that has outperformed ETF or passive investing. But for me, someone like me who is not a financial graduate or not a expert in stock picking, I would let and allow ETF to do the job instead of me individually picking stocks or me paying such a high fee to mutual funds. So we could go more into it, what the differences are and why I've chosen StashAway in a separate video. But so far, this is StashAway. This is how the phone app looks like. I have 69,000 in assets right now. When you create StashAway, what it shows you is that it would first ask you, what is your StashAway risk index, right? So this risk index will go into a little bit more what StashAway meant by a StashAway risk index. It will ask you to choose. So if you create new portfolio, it will tell you to choose either general investing or goal-based investing. So if we click on general investing, we can see that they split it up into core or higher risk. Core is basically more stable, less return typically than higher risk profile, but you would get a steady stream of income, right? But a higher return or higher risk, it's usually typically suitable for a younger person like me in the mid-20s, trying to survive in this world, trying to make a decent income, a decent living. Well, I can afford to stomach the higher risk, right? So it would tell you like, okay, they're investing in a USD currency. They would recommend you to keep your money in for at least 3 to 5 years. And so over here, you can choose your StashAway risk portfolio, right? The highest risk is a 36% risk index, and your lowest risk is, I think, a 6.5% risk index. But over here, you can see that what it means, the number of 30%, 36%, and so on, means that the StashAway risk index means that there is a 1% chance that your portfolio would lose more than whatever StashAway risk index you've chosen. So if this is 30%, there is a 1% chance that your portfolio will drop more than 30% in value in any given year. So that's quite substantial. So you have to choose your profile properly uh, 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 to gauge your risk index and to see what kind of risk you're willing to take, right? Obviously, with the higher risk, higher returns, and also higher volatility, lower risk, lower returns, but also less volatility. So you can see that in the year 36% risk, let's go to 36%, which is the portfolio, one of my portfolio that I have. You can see that they have their projections, right? How much you can get if you invest it for 30 years and so on, and 2 million for that 75% chance, 50% chance, you get almost $4 million and so on, right? But we can go into their projections in more detail in a separate video. So you can see these are the allocations or target assets that they invest in a 36% risk index. You can see US equities, right? International equities, commodities, real estate, and cash. So basically, if we look at the US equities, we can see that they're investing in 3 different ETFs. The IJR, which is the small caps S&P 600 stocks in the US. The XLV, which is the healthcare sector, so anything like Johnson and Johnson, United, UNH, right? They would invest in these individual stocks. And then you have the XLY, which is consumer discretionary. Then when we look at international equities, you can see that they're investing in SPEM, which is the emerging stock market or emerging markets ETF. You could see that also they've invested in KWEB. This is a really interesting ETF. We could deep dive into more of this ETF if you want me to explain a little bit more what it is. I can make a separate video. Let me know in the comments down below. But basically, this ETF, what it does is it invests in technology stocks in China. So for example, companies like Alibaba, JD.com, Tencent, they invested in this ETF. And so when you buy a share of this ETF, what you're essentially doing is that you are buying a portion of Alibaba, a portion of Tencent, a portion of JD.com. And so it has been giving me really, really good returns so far. And then lastly, in the international equities, it invests in AAXJ. So if we look at commodities, it invests in gold, so GLD, which is not actual gold, it's just the ETF of gold. So you're not buying when you invest in this ETF, you're not buying actual gold. But what this ETF does, it tracks the value of gold or the cost of gold, and basically you're just buying it over time. And StashAway has quite a sizable amount allocated to gold, 20% of the portfolio. I think this is basically to hedge against the recession that StashAway has predicted that would come. Finally, we have real estate. So they've invested in VNQI ETF, which is basically the global real estate except for the US market. Lastly, we have 1% cash. So you could see that StashAway are pretty good. So whenever you buy and put more money into your portfolio, it will buy accordingly based on its target, right? Target market. So let's go back. Let's look at GoBase. So what GoBase does is if you want to, let's say, plan to buy a house or to buy a vehicle, right? So you're like, okay, now my Proton is not doing very well. I want to buy a Honda maybe in 3 years, right? A Honda Accord, pretty good car. What kind of car is it? Well, obviously, is it a car? Is it a compact car? Are you buying a new car? How much percent are you expecting to loan or to put through? And it will say, okay, you need to invest 21, or you need to have a 21K in your portfolio in 3 years to be able to get that car. So with that, how much do I need to put in every month? So it will tell you you have to put in at least $511 every month before you can see that return. And it will tell you that these are the investments that they recommend you to invest in. So just slightly different, right? General investing and goal-based. So far, what I've been doing is just having 2 portfolios. You can see here a 36%, right, risk index and a 22% risk index. And then lastly, they have StashAway Simple, sorry. I just put in $1,000 just to see how it's been performing, and you want to put it in a little longer to see how it's performing and whether there's a benefit for me to put in my cash that is sitting in the bank over in StashAway Simple. So you can see my performance, right? I've been investing since the 1st of September so far, in both portfolios, and you can see my return so far has been pretty good. I've been getting now a positive of 4,000 ringgit, right? 4,147 ringgit. You can see that based on the individual performance. So if I look at my 36% risk index, so far I've gotten 2,800 ringgit in profits, and time weighted return, I'm up by 7.53%, which is basically a little bit better than at the S&P 500 ETF or S&P 500 index, right? The S&P 500 index, if you were to invest from the 1st of September to now, you would get a 7% positive, right? Time weighted return. But if we look at money weighted return, it then has higher, right? 15%. So I can go over a little bit in more detail what time weighted is and how they calculate money weighted return. If we look at my 22% risk index, I'm very happy with my performance also. So far, $1,000, $1,300 in profit. Time weighted return, 0.73%. Not as good as the 36%, just because I only started investing this in the beginning of the year, but my money weighted is actually pretty good, 10.22%. So very happy with my portfolio so far, and how it's been performing for me in StashAway. And then the third tab, you can go into the academy. It's basically showing you or teaching you investment 101. You can sign up for courses and webinar, and it will tell you a little bit more about investing or how StashAway have chosen their ETFs or their profiles, and it's pretty good to watch some of these videos, especially for new people like you and I. Lastly, we have the transaction tab. It's basically the money that I've been putting into StashAway and what it's been giving me, right? And so far, and also the more section is just more information about yourself. I wouldn't click into it. It's basically more information about your profile and who you are, basically, right? So for those of you who are interested in StashAway, you can sign up with my referral link down below, and you and I would get both a 6 months free of fees by StashAway. And just to go over it, StashAway has really low fees. The highest fee that they charge is 8.8% of your portfolio annually. So you're literally paying peanuts for them to invest your money in. And comments in the section down below, since this is my first video. Let me know what you would like to know in more details, my investment strategy, how I invest and so on, or what StashAway does for you as a individual, and how you can use StashAway to leverage and invest in your money. And I will do a video for it and churn out more quality videos for you guys. So as of now, this is what I have to show. Just a basic 101 of StashAway, and hopefully you enjoy it, and share it, like it, and comment. Thank you guys. See you next time.